Welcome back. I'm talking with the CEO of Bank of America this morning, Brian Moynihan. And Brian, I want to get your take on this government shutdown. We are now in day 28. And I know you've had a great quarter in the third quarter. You had tons of IPOs and M&A advisory revenue was up. We're going to see a different story, I assume, for the fourth quarter, given the fact that you probably have a ton of IPOs to take public, but you can't even put in filings for the Securities and Exchange Commission is closed.
Yeah, so I think if you back up, the government shutdown and argument over the budget and everything, that is a political process. But from an economic perspective, ultimately, it's going to slow down the economy because the need to get approvals from the government to do things, whatever it is, slows down. You talked a lot about the FAA. Will flights slow down when people stop traveling? And so I think the idea is that it will have an effect. The actual number of government workers, and we as a company, a lot of my colleague companies, do the same thing we do for people in any other difficult situation, fee forgiveness, loan forbearance, and things like that.
That's a big deal.
And we have 250 to 300,000 government employees are our customers, so that's a big deal. And so we do all that, and the industry steps up. But the real question is, as it goes on longer, it affects more parts of the economy because activities that need approvals, need things getting done, just can't get done. And so I hope they resolve it. I always hope that they do, because at the end of the day, there's a lot of discussion has to take place about the fiscal situation in the United States. Having it, I think it's better to have that with a clear head and sit down and think about it without the pressure of what's going on around it.
How many deals would you say are right now on the shelf that you could be doing, but you can't do it now because you have to file with the SEC?
I don't have a count for you. Now, the good news is M&A deals keep going through. So we had 2 deals announced on Monday that we were involved in. So at the IPO, I'd have to check with the team. But it's not. I wouldn't be worried as much even about that. I'd be worried about the general. If a malaise develops and people slow down their spending, that's an issue. If employers start to say, I have to adjust my head count faster than I'd otherwise adjust it, that's an issue. So that's where the big issues will come.
Really great point. Yeah. Brian, talk to us about the credit concerns out there right now. We saw, of course, the regional banks get rattled because we had a bankruptcy, we had Tricolor, you also had First Brands. We're worried about potential fraud. Yeah. Is Bank of America exposed, and how significant is this for the broader regional banking sector?
The exposure to us is not material in any of these things, and a lot of them we don't have any exposure to. But I think let's step back and think about it. One of the questions that you're coming off is when people say, oh, charge-offs are rising, like in our company, actually the credit quality went way down, and it got much, much better after the pandemic because consumers were given, through the stimulus, not given, but they were delivered a lot of stimulus and stuff. So charge-off rates came way down, and then they moved back up to where they are today. It's relatively close to where they were in 2019. 2019 was a 50-year low in our credit costs in our company. So one of the questions here is we're seeing a normalization of credit that's still going through the system, first on the consumer side and on the commercial side. The second thing is these episodic issues are coming in portfolios are relatively new. So in the private capital, they formed a lot of portfolios. And so you're starting to see some of the hits that were probably taken into account. Then the third is these frauds are the thing that bothers people. And you go look and you check your portfolio, and everybody's doing the same thing and running
absolutely
and looking at it. And those are good collateral management practices. And of course, we check and make sure we're doing it right and we feel good about it. But I think you have to sort the issue of, there's always going to be charge-offs. Like commercial real estate, 2.5 years ago or so, you'd have been asking me nothing about commercial real estate. After the pandemic, back to work isn't going to work. There's going to be massive write-offs. What aren't you talking about? And so the banking system is well regulated. The stress test sort of shows people what the risks in the portfolios are. It drives across 31 companies, well more than half of all the assets. So in the banking system, pretty well regulated. Outside the banking system, there's ability to do more flexible credit terms and stuff like that. You're seeing some of the attributes. That's going to be more of an investor question. Will the investors get the returns in those funds they thought they should have? And the answer will be yes or no, and then they'll decide whether to reinvest or not. And then the third question is, does exposure of the banking system to those funds have any indirect basis? And we'll explain on Investor Day, and we don't. The way we lend to those funds is very different than what we think. And so things get caught in like mortgage warehouse finance. So we do agency-related mortgage warehouse finance for mortgage companies, all government-guaranteed mortgages, all going through the securitization process as plain vanilla as you can. Yet that's reported in that non-bank financial. So there's a little bit of confusion. We're going to try to lay that out and straighten it, but we feel very good about Bank of America, and the credit quality is very good.
Well, I like what you're saying, because the role of private credit today is being questioned. An enormous amount of money being lent by the folks at Blackstone, Apollo. Do you worry about that private credit situation?
so it's a competitive risk for the banking system, because in the end of the day, if you look across things that make the banking system what it is the ability to take deposits and make the loans. And when you think about what we do, is we take your deposit in and we lend it out to somebody else. And largely in the consumer side, most of the asset classes are going through non-bank lenders, except for credit card and home equity. Mortgage loans are more than half off the system, et cetera. So that's one side.
Yeah.
If you go to the commercial side, generally the large commercial stuff all went to the capital markets. The middle market thing's at risk now, and that's where we as industry have to have a good answer for our customers of why they should stay with us and not go with these private credit funds that are a $500 million revenue company or something like that. And we have a great answer. Bank of America, we're the largest in the business.
Great points all around. We'll be listening to what you say about all of this at the Investor Day. Good luck with that.
Thank you.
And I know you've also got an easier regulatory backdrop with what's going on with the Basel III endgame. We'll wait for a resolution there as well. Brian, thank you so much.
Thank you, Maria.
Good to see you
again.
Brian Moynihan is the CEO of Bank of America, and we'll be right back.